Hey guys, welcome back to my channel. Today I thought I'd actually share my Robinhood portfolio, just a few stocks. It's about $7,500. And I thought I'd make this channel just so you guys can see what stocks I own and as well to gain some more exposure for this channel. If you guys like this video and want to see more like it, please make sure to like, comment, and subscribe. It really helps me out and I'll know if I need to continue providing this content for you guys. So the first stock that I own is Starbucks. I own 2 shares of it, so not much. And just to let you guys know, I'm a long-term investor, so I'm not really looking forward to these gains within the next year or so. I'm looking forward 10, 20 plus years, and I don't really look to sell stocks. I look to buy companies now and hold the benefits for a long time. As you can see, I've been investing for almost about a year. Been doing okay so far. But let's get into the first stock I own. So Starbucks, 2 shares. Bought this when it was around $50. It was when they gained a lot of publicity for those customers that came into their location. And been doing pretty well. Now Starbucks they're continuing to look to expand and is forcing and offering more products on their menu while they can cut down wait times. So Starbucks added 1 million people to their Starbucks reward program last year and is increasing their total memberships to 16.3 million, which was a 14% increase in the last year. Starbucks payout ratio is only about 60% and has 8 straight years of continuing to grow its dividend, and I wouldn't expect that to stop anytime soon. So as you guys can see, I've made a pretty solid return, about 35%, as well as also gotten some solid dividend payments. And I look forward to the stock to continue growing, and we'll definitely try to add some more shares to it. So the second stock that I own is one that's probably less known. It's called Otter Tails. It's a utilities company, so go down to the about. It's a holding company which engages in the energy, infrastructure, and production. It's headquartered in Minnesota, and its dividend is slightly lower than most utility companies at around 3%, but it definitely has a lot of room to grow. Its payout ratio is only 61%. So that means they're able to continue expanding its business as well as pay out its shareholders comfortably. And I can definitely see a lot of growth here. It's grown 68% in the last 5 years. So this is one of the first stocks that I purchased, and also look forward to owning more shares of this. So the third stock that I own is FedEx. Now I probably bought this stock a little too high, bought it in at $235, so I'm kind of down, but I still believe in FedEx over the long term. They've taken quite a dip recently, which is why I want to buy more shares whenever it dips. And a lot of people might be scared about Amazon, but a big advantage that FedEx has over Amazon is that they have a lot more physical brick and mortar stores that allows them to get their online orders out quicker than their competitors as well as Amazon. And they actually announced that retailers can use its extra hours service to guarantee fast shipping even when customers place their orders in the evening. So they're doing overnight shipping. And FedEx is a big time company. They've been in the game for a long time. It gives a pretty low dividend yield there, but that obviously offers the more ability to continue growing. So I've gotten some solid dividends there. Again, a long-term investment here. And it's a good opportunity to buy at a dip here. I think I can definitely see this expanding more. And I own JP Morgan Chase, one of the biggest banks, if not the biggest bank in America, has a market cap of over $350 billion, or a little under that actually. It just raised its dividend quite substantially in the past year, by 43% actually. It missed its earnings calls revenue estimates, but they still made $32 billion in 2018. People are going to continue using this bank. It's the preferred bank for a lot of friends and family I know. It's one of the top banks in America, as I mentioned. And they're also looking to expand more internationally too, into China, into India. And those have a lot of people a lot of room for growth. Its payout ratio is only around 30%. So definitely a good growth stock, and it will continue to grow its dividends because it definitely has the funds to do so. It's up 78% in the last 5 years. I think it's still a little undervalued actually here, and you might be able to buy a couple more shares at a dip. And the last stock that I'm going to share with you guys is Boeing. I own 2 shares. This is a little bit more of a pricier stock. And this stock has just been fluctuating in the 300s ever since I bought it. It's definitely one that has quite peaks and valleys, so you can definitely maybe try to buy it at a discount if you watch it over the long term. And I'm sure most of you guys know what Boeing does. They're a airplane manufacturing company, aerospace, commercial jetliners, very large company. And this is a hard industry to get into. You have to have a lot of capital and a lot of resources to start, an airline or aerospace company. It's grown so much in the last 5 years, 157%. It gives a solid dividend yield there of 1.93. And Boeing's management said that they're expecting an increase in the amount of Boeing 777Xs. And they just got a $2.5 billion U.S. defense contract. And Boeing's will continue to provide those type of security devices and machines and aircrafts for the governments around the world. It's one of the things that they specialize in. I know some people call this a war stock, but they obviously do a lot with just commercial airlines as well. So those are the 5 stocks that I'm going to go over today. If you guys want to see the rest of my holdings, make sure to let me know in the comments, and that'll encourage me to continue to make videos.